Have you ever wondered how you can find companies that return 100x in the stock market? These companies are changing $10,000 into $1 million. So in this video, we're going to go through Chris Mayer's 100 baggers, stocks that return 100x and how to find them. And we're going to distill the key concepts in finding that 100x, next 100x stock. So stay tuned. And with that, let's get into it. The first thing that you need to have when you're trying to find a 100 bagger is patience. Time is key in finding and getting a 100 bagger. And this makes sense because everything requires time to compound. You make more in 10 years rather than 5 years, and it'll be exponentially more because of the power of compounding. Compounding is the eighth wonder of the world. So you need to have patience, you need to have time, you need to have time for these things to work out into a 100 bagger. After you've done the stock screening, after you've found the conviction in that stock or investment. So you have to let it play out, basically. After patience and time, let's go through a list of actual specific requirements for these stocks to yield or generate 100x. So the first thing is low multiples, stock buybacks, owner operation, competitive moat, betting big on your investment, and small market cap. So let's go through each one of these and dissect them to see what each means and how we can use it to find that 100 bagger. It should go without saying that if you pay $1 million for a stock, versus if you pay $5 for that stock, there's going to be a difference in the return that you're going to receive after 5 years, 10 years, 20 years. When you pay $5 for a stock and it's intrinsically worth $100, you're going to make $95 on that stock. For the $1 million stock that's worth $100 intrinsically, you've overpaid by a large sum. So you have to take into account low multiples when you're doing your screening search for these stocks. It doesn't matter what you do. If you don't get it at the right price, it is a bad investment. It's going to be a bad investment. It's definitely not going to return a 100 bagger. You might even lose money on that investment. So you have to make sure that you get a stock at a low multiple. So next you have stock buybacks. Stock buybacks are a super powerful tool for companies when they are used right. It should go without saying also that stock buybacks should not be used at sky-high valuations when the multiples are super high and it doesn't even make sense for the company or management to buy those stocks back, those shares back. If they are used judiciously when the stock price, when the company value is intrinsically undervalued to its real value, then it's a great idea to do stock buybacks and reduce the existing share count to give shareholders a large return on their invested capital. So they should do these. You should always look for these in these 100 bagger stocks when they are doing it right and management is operating intelligently. Owner operation is super key as well. This is where the company is still run and operated by the original founders. So why is this important? It's important because then those owners have a skin in the game. They were there when the company was at its lowest. They were there when the company was hitting all-time highs. But the key thing is they have this passion and drive to continue working with this company, to continue pushing this company to excel in terms of growth, in terms of, top line revenue, in terms of, streamlining operations, getting the operational income right, and then keeping the bottom line net income churning. So it's very key that you find companies that either have their owner operating and running the business, or somebody related close to the owner, the original owners running the business. These owner operators also know how to treat their investors like part of the business. So they're not, trying to get expensive stock compensation packages. They're not trying to do any of that. They're trying to improve and increase investor returns every year, all year. So this is what you want to look for in terms of owner operated companies. Now, a huge thing to look for, another criteria for these 100 baggers, is a competitive moat. And so I've talked about this on my blog many times, but a competitive moat is basically how able is a company to defend and differentiate their products, their services from other companies in their industry and any would-be competition coming up in the ranks. So 100 bagger stocks it's almost like a requirement that they have strong competitive moats that can keep competitors at bay and make sure that the money that the revenue that they're generating can be invested back into the business at a high growth rate. And that's key, because if they are not able to invest back into their business and make a large return every single year on that invested capital, they're not going to be able to 100 bag. They're not going to be able to 100x their returns. It's not possible. You have to be able to compound high amounts of capital at large growth rates for a long time. It's not very easy to do, and that's why these companies are so rare in the market. Now, let me ask you a question to whoever's watching this. Would you make a life-changing money if you invested $1 million into a stock and then it went on to go 100x? I think you would, right? But what if you invested $1 into that 100x stock? Would you still make a life-changing money? No, you would not. You would only make $100 out of that 100x return. You still made a 100x return, but you would not make any meaningful money. So the key here, the concept here is you need to bet big. So you've done the research, you've done the due diligence, but you need to bet big to support and back that conviction in that stock, in all the research and all the hard work that you did to find this stock. Otherwise, it's not worth it. You're not going to make any type of reward on all of that work. It's almost pointless to do it at that point. So once you've gotten this far into your research and due diligence, you need to bet big. Otherwise, everything could be pointless. And the last criteria that I want to talk about is how these companies should have a small market cap. So I'm talking about market caps less than $1 billion. The law of large numbers is real and true. If you have a $1 trillion company, it's much more difficult for that $1 trillion company to 100x over any given time frame, rather than a $1 billion company going from 1 billion to 100 billion versus a $1 trillion company going from 1 trillion to 100 trillion. It doesn't make sense at some point. So the law of large numbers means that you need to find small market cap, good quality, high quality, dependable, competitive moat having companies that can compound their growth, their high growth, over long periods of time. And that's pretty much the key to finding these 100 baggers. It's not magic science. It's not magical. You just need to make sure you screen for these type of criterias and then hold on with patience and for a long period of time while the law of compounding does its work for you. So in this way, you can just keep finding bets like this and make sure that you have the conviction. And then eventually when you pull the trigger, you might have a winning stock. You might have a 100 bagger. So to summarize, it's clear the main thing here is you need to find high quality businesses that are able to compound their reinvestment into their business. So they're returning high ROIC, return on invested capital, to the shareholders. So that's the primary thing that you need to look for. And that's the key gatekeeping criteria that you need to look for. All right, guys, that's going to be it for this video. As usual, these videos take a long time to make, so please subscribe and like and comment down below. Thank you.